As you said, I'm Scott Curtis, real estate partner at international law firm CMS, based here in London, specialising in hospitality and student housing sectors. My panel and I have been tasked with exploring investment in operational real estate across geographies, across multiple sectors, in under 30 minutes. We'll also try to leave some time at the end of our discussion for some questions from the audience, so please have them ready. With no time to waste, let's meet our panel. We'll start with Nick.
Thank you, Scott. Good morning, everybody. I'm Nick Sanderson. I'm Chief Executive of Audley. We develop integrated retirement communities, senior living all around the UK. Two brands, Audley and Mayfield, more affordable and premium.
Hi, I'm Dimitri. I run, I'm the president for Europe, Middle East, Eurasia, and Africa for Wyndham Hotels and Resorts.
Good morning. I'm Lauren Okada-Young, and I cover hospitality and housing for Europe for Brookfield. We have 14 billion of AUM across strategies in this space, from hotels to apart hotels, PBSA, and traditional residential.
Yeah, morning everyone. Giles Smith. I head the fund management team for Principal Real Estate in Europe. Principal manages a range of different strategies across sectors, including operational real estate.
Good morning all, Margit Verkruijsen, Muse, looking after the relations with ownership groups and management companies, heading up the different teams that are looking after that.
Perfect, thank you. So, Lauren, I'm going to start with you. Apologies, I can't see you all down there. So, the current macroeconomic environment presents both challenges and opportunities, as everyone will have just heard. As a global investor, how is Brookfield approaching investment within its operational real estate strategies?
Sure. So I think it's very easy to get hung up on the challenges, and it's been a difficult few years with many ups and downs, and obviously some challenges that were unforeseen. I'm thinking about COVID. There was interest rate rises. There were inflationary environments, and now some geopolitical tension. So across all of those things, a lot of challenges and things that are easy to get focused on. So for us, we invest across cycles, and our strategy is fairly consistent across this. So we look at buying high quality assets, investing on a value basis, so getting in at the right entry price, and trying to enhance the value of these assets through an operational approach. And so I think this applies really well to the sectors that we're talking about with operational real estate, and that there are a lot more levers to pull and a lot more flexibility in the assets. In Europe, we've typically invested on behalf of closed-ended funds that typically have a higher cost of capital. And one of the ways that we've been more successful in deploying our capital is in not only investing in the real estate itself, but also looking at investing into opcos, which can provide a lot more opportunity to add value for our investors. So we've done this successfully. I'll give the example of student housing, where we've had 4 different PBSA strategies and amassed over 50,000 beds by investing in these 4 different companies. And effectively, what we liked is the fundamentals of the sector, but I think we struggled to find the product. So for instance, when we entered the Spanish market with Lavenza, there wasn't a lot of existing PBSA stock that was just available for sale. And so what we ended up doing is kind of creating this vertically integrated operating company that had the ability to not only operate, but also develop the new product. And so entering that new market, it was a bit of a, I guess, kind of a nascent sector, but I think kind of combining that real estate investment with the operating company provided us a lot of opportunity there.
Thank you. Giles, does that resonate with the approach taken at Principal?
Yeah, I think we've certainly seen a huge pivot over the last 5 years towards operational real estate, and it's quite a broad church, operational real estate. So I know a lot of people from the hotel and PBSA sector here, but it includes sectors such as healthcare and data centers as well, to a certain extent. So very diverse and lots of different challenges in those markets. I think one of the big differences between perhaps the approach we take and Brookfield is we tend to invest in the real estate rather than taking the sort of vertically integrated operational risk as well. And that presents its own challenges, particularly when you're looking to get into a new sector or a new market. And we've touched on PBSA, but if you look at the PBSA sector in the UK, it's one of the most mature markets in Europe. And if you're a new entrant looking to invest, that can be very difficult. You need scale, you need infrastructure, you need to work with the operators who have all of that in place. And if you're looking to make one or two investments, how do you ensure that your asset is getting the priority from that operator? And I think for us, our focus at the moment is much more on the more supply-constrained markets. And I think that's where a product like data centers really comes into its own. And we have to spend a lot of time understanding the operators we work with, their sort of financial base, their infrastructure, and what that means for future growth and downside risk. And interesting, another trend we're seeing at the moment from the way we invest is, if you look at a sector that takes a significant amount of capital from LPs to develop new stock, be it data centers or perhaps even the PBSA sector, we're now seeing LPs say, well, hang on, if we're really supporting the growth of these operational platforms, we need to make sure that that risk is properly aligned. And I think this is particularly relevant for new entrants into the market where there is more of a risk on the downside. LPs are wanting to share in that uplift in enterprise value through traditional fund structures. Mm-hmm. So we're seeing a firm shift, I think, in how the alignment works between operational entities and underlying real estate investors.
Thanks. So Dimitri, coming to you next. So Wyndham operates exclusively through a franchise model in EMEA. We've heard from two institutional investors who've talked about the importance of the operator, the operations to their investment. What are you looking for in your relationships with the operations team, the management teams of the hospitality offerings, bearing a Wyndham brand, and how can other sectors learn from the franchise model?
Okay, I mean, if you look at the way the world is going, right? I mean, most of the hotel groups out there, the big brands, they're all going asset light.
Yeah.
And there are more and more people that they are leaving the operation behind, and they're trusting third-party managers and white label operators to do the work. I think that's, I mean, for us, it has worked. We've got 9,200 hotels in 95 countries. I think we operate about 100 of those. And the rest, we trust local operators and local white label companies to do that. There's so much talent, and I know that we talk about the lack of talent, but I think that's a bit of a myth as well, because there's so much talent in our industry that is actually doing a phenomenal job in various countries, building those new white label operators and third-party management companies to actually take over from people like us that we used to manage, but we don't anymore. I think that's, as my colleagues have said, some of the private equity as well and the investors are actually doing that as well. They're buying platforms and they're saying, look, instead of actually trusting somebody else to do it for us, we'll do it for ourselves. So they buy platforms, they invest in people, they invest in technology, they invest in getting those third-party management companies up to speed, and they have a great future. So I don't think that, the myth of talent, yes, we don't have enough talent, but we do have enough talent that those companies can actually grow. I think that they've proven, very rightly so, that they're better operators than the brands. That's why the brands gradually, they let go of the operations, and it's part of a business model as well. And third and most important, you've got a variety of people instead of a cookie cutter approach, especially after COVID. There's no brand standards. We are far more flexible in what we do out there. So third-party companies are far more flexible in actually doing that instead of the bureaucracy of a brand that has 9,200 hotels around the world and is trying to do everything by the book. So you gotta trust those operators to be innovative, flexible, and have the ability to move faster. So I think it's a great solution. It works for us, and it looks like it works for others as well.
Okay. So lots of focus on experience management, operators, innovation, being critical to investment, brand. Nick, coming to you, with Audley being sort of at the forefront of senior living in the UK, can you talk us through sort of your experience with investors into your business?
Yes, I mean, and we're operators in a space that I used the term integrated retirement communities earlier because we are fully integrated in the services we offer. That means that we're providing not just a housing solution, but lifestyle and care options, keeping people independent for as long as possible. That means that we have to be operationally intensive. That means we have to take a lot of responsibility for a group of people who, generally speaking, I would say, with respect to everybody in this room, investors are reluctant to be involved with because they see only reputational risk flashing everywhere. With Dimitri's business, for instance, in our hotels, you have a person for a night or 2 weeks. We have people for the rest of their lives. They have increasing needs, and we support those needs and provide for them within their own homes. That is perceived to be a risk, a high risk, reputational risk, at least for investors. So what we've seen actually in the UK is a very, very slow take-up, frankly, of what is actually the biggest market of any that you might discuss today. We touched on housing earlier. There are 12 million older people, but of those 20 million homes you saw up earlier, 10 million are mortgage-free. That's our customers. 2.7 trillion pounds worth of wealth, a housing crisis, and a social care crisis with everybody wanting people to move out of under-occupied housing, everybody wanting to keep out of the social care and healthcare system. So it's potentially a massive market and is around the world. So why hasn't it taken off? Well, I think we touched on that point actually, which is if investors look for a dry route into this and offsetting all of the operational intensity and risk, then I think that's hard for them to do because reputation sticks whether or not you're the operator or just the investor. And that has been a challenge for us over the years. And I think it's part of the explanation as to why we haven't grown as we could have done.
You touched on there, it has worked around the world in senior living. So the US market, New Zealand is a mature market in senior living.
It is.
We've got no shortage of old people in the UK and Europe.
No,
Speak for yourself.
We're getting there.
no I'm getting there myself.
Why is Europe lagging behind?
Yeah, well, I think it's cultural, it's social, it's all sorts of things, but mostly it's fear. Nobody here wants to get old, do you? And I bet put your hand up if you're looking forward to moving into a care home. Nobody.
Any specials for the conference?
Yeah, absolutely. Yeah, everybody therefore is afraid. They've seen, and let's be honest, generations previously have had a miserable end to their lives in either within the care of the NHS, dysfunctional NHS, or in a care home. So everybody resists for as long as possible. They're in denial. They don't want to accept they need help. So from the consumer side, there's never been a push for big demand. There's never been a push for expansion. The Americans think we're nuts. I don't know if you agree. The idea that we would carry on living in an oversized house when actually we have needs, which would be better suited in appropriate housing with care available. You know, the average age last people buy a house in America is 60. Here it's 45, broadly speaking. We just buy and stick because we're frightened of the options. So the consumer side, that. Similarly, I think part of it I've already answered, Scott. I think the investment community has been cautious about entering something that's not got proof of concept. And though I can quote to them New Zealand, where the fourth largest listed business just does what I do, they would say, yeah, but they're different in New Zealand. So it's been a challenge to get people to come. And again, I'd say understandably, there's a caution amongst institutional investors. That said, it's happening. We've got partnerships with BlackRock, Royal London, Schroders, other people. So it is coming, though I would stress they tend to prefer to be in the drier side investment. And we want more of them to come all the way up the operational scale because actually, firstly, it's the right thing to do. Secondly, they'll actually get better value.
We've discussed previously, haven't we, the investors, the cash will be there on the way in as long as they know
Somebody will take it out.
how are they getting out of it at the end.
And of course, the US particularly, the REITs, healthcare REITs in the US are vast.
Yeah.
They provided the answer to that question, which is it's worth taking the development risk on the way through because you know somebody will take you out of the long-term income.
Yeah, and Giles touched on it earlier with part of the problem is the people that want to take you out, they want scale. We're not there yet and can't get there until
Yeah, exactly.
demographic moves.
Catch 22.
Indeed. So we've heard about a lack of innovation. There's talent, but people are leaving the industry across all sectors. And that's potentially stalling investment, scalable growth. People are playing it safe, I think is what we've heard in certain sectors. So Margit, is technology going to solve these problems, drive tangible value for investors?
Absolutely. So what we're seeing at Muse is that there definitely is an interest and an appetite in industry. And the way how we see that literally coming in is the amount of RFIs and RFPs that are sent out presently. So there is this curiosity and this knowledge that something needs to change. At the same time, we also feel that there is a lot of awareness that one doesn't know what you don't know. So being in this kind of realm, knowing you have to move now because of that shortage of staff, for example, is a driver, but it's not making people feel comfortable because of that needing to invest. So the urgency is there. So some of the things that we are seeing there from our point of view is that it is a great way to actually embark on a journey together by making sure that a hotelier, a brand, a group, a management company does not only see the technology fit for actually selling rooms. So our vision really is to look beyond the actual accommodation component of a building and really enabling the end users ultimately to make use of any given space that is available. And a space can be a seat as well. A space can be a bike, Dutch as I am, I always need to throw that one in. It can be a parking lot. So really to monetize on various elements that are provided as literally little golden nuggets, as we'd like to say. So I think to come back to your point, is technology going to solve everything? I think it also first starts with the mindset and embracing that. And I know that's very easily said. The other component that we're seeing, yes, and I don't want to touch too much on AI, but we do see that AI will be helping in that sense. If you think, for example, about that shortage of staff, needing to have operational processes being further refined, how are we going to do that? Because very often in our industry, unfortunately, we still see that there is a very broad, very vast landscape of all different systems that are not connected to one another. So how do we want to make our staff actually feel comfortable to actually give that experience to any of the guests that are out there? So this is where we feel as well that technology, for example, like Muse, is able with AI to extract from all of those different siloed systems that hotels work with, to take all of that and put that together in a useful, comprehensive way for a receptionist, for example, to work with. So again, these are just examples to illustrate indeed that we do feel, and I personally do believe very strongly, that technology will contribute to that moving forward. And there's various other components, like, for example, loyalty, not to be underestimated. How are we going to go around that moving forward? Our belief is as well that it's not just the experience on property, but what one could think of is to really become a household name. Everybody uses those days, I'm Googling XYZ or I'm taking an Uber. So why not becoming a household name as a hotel or hospitality brand for that matter, and thinking to have that experience at home as you wouldn't be traveling obviously in the city where you are residing. So there's various angles how technology can accommodate that and find new entries and new resources and monetary streams for that matter.
Giles, from an investment perspective, anything to add on technology? Any thoughts?
Yeah, no, listen, I mean, we have exposure across the more traditional sectors of office and logistics. And I think as we saw in the opening comments, AI and technology have had a significant impact on those sectors and are going to continue to do so. Office in some markets was having a mini recovery. I'm sort of very nervous now, having seen this morning's opening comments. But I think it's, we as investors have to be conscious and understand where technology is going, where it can add benefit, and where there are the synergies between different systems to create, effectively an experience for the the consumer and an experience that works. I was interested in Denmark recently and stayed in a hotel which was fully one of these ones where you don't see an individual. It's all done through the app. You check in, work seamlessly. But at the end of the day, I came away thinking, well, that was a pretty lonely experience as a traveler on my own and not the type of experience I want. So it worked well, but is it giving the consumer what they actually need? Is it targeting the right kind of consumer? So I think there's going to be a lot of change driven through technology, but it's got to be focused and it's got to be directed at the right end user.
Perfect. Thank you. I'll tell you what, I'm going to throw it out to questions. I'll come back to some of mine if people don't have questions, but any questions from the audience for the panel? Feel free to throw things at them.
Tim Davis, Pace Dimensions, management consulting company. One of the things that I have observed over the last 30 years is that the hotel industry has fragmented into its different roles and scaled within each of those roles, franchising, management, operations, etc. What I don't recognize in 30 years is any improvement of productivity within hotels. I see an over-reliance on price point to drive returns when costs go up, and an over-reliance on the macroeconomics of ups and downs of demand. But I don't see any real improvement in productivity. Do you agree? And do you think, or the question is there an opportunity, or what is holding us back from improving productivity within hotel operations?
I mean, I can give you my views. In 1960s, today versus 1960s, it takes exactly the same hours to fix a bed or to clean a room. So that's one reality. Second reality, until recently, and I only discovered what AI really means about a week ago. I always thought it was all inclusive. So finally I went to a conference and somebody explained to me what it means. So thank you very much. Now I understand what's going on in the world. But the most innovative thing that we've all done in the hotel business until after COVID was, what was the common thing that you can see in any hotel you go, regardless of the segment? The triangle of the toilet paper, right? That's the biggest innovation we've all done. We've discovered that in the toilet paper, you have to have like a little triangle. It's the same thing. You go into economy and luxury, it was always the same thing. That was the common thing that we had. Why I say that? Because productivity is I think we were all scared to touch things that had to do with the human element of hospitality. Because the moment you start talking about productivity, people start thinking about cutting jobs, getting less people employed, and so forth and so on. So it was one of the things, especially in an industry that is based on human beings, that productivity was a word that was not actually used very often. Now, here comes AI that has changed that narrative completely. Because now we use the word technology so much that people are not coming to work in this industry because they're afraid that their jobs are going to be replaced by robots or bots. So it's a very thin line about when you talk about productivity and what you actually mean and how you cannot turn people away from an industry that is still, no matter what is happening out there, is still based on the human beings. So making people more productive is using technology to actually give them more sense in what they do every single day. At the same time, use technology in order to become far more efficient on waste management, energy, and that improves your productivity. Productivity is driven by people, is driven by innovation, and today is driven by technology as well. We all agree, in all the conferences that I've been, everybody has said this industry is the industry that lacks technology innovation, especially just before COVID. We were the only industry that was lacking adapting innovations that other industries have adapted 50, 30, 40 years ago. So now things have changed. We've seen more innovation in the last 5 years in our industry than we've seen in decades. What does that mean? Increased productivity, getting people to do more meaningful jobs, and that's the message we should give to people, that we're not planning to replace you with bots or kind of keypads. We're actually giving you more reasons to be more productive. So the word productivity, and you're spot on, The word productivity is not just making more money, it's actually giving more sense of purpose to all these people, the billions, millions of people, or hundreds of millions who work in our industry. And that's how I see it. So,
Thank you.
and I'm 60 years old, so I qualify for senior living. So I'm going to join
Great
as my next job.
hospitality, yeah.
We've got some more questions, I think, Andrew.
Hi, Neil Young from Young Group. Question for Nick. Do you think with more senior living providers entering the rental market or the rental proposition, that's going to help the sector grow?
Yes, I do. People ask me, I wish I had £1 for every time an investor said, you know, I love your model, but I wish you'd rented rather than sold. It shouldn't be driven by an investment decision. Obviously, it's driven by our customers. And truthfully, when I talked earlier about the £2.7 trillion of the housing wealth that our customers have been lucky, and let's be honest, it is lucky, to have accumulated in their lives, they think without question that home ownership is the very best place for them to keep their capital for as long as possible. So they are very attracted by selling their home, downsizing and investing in a new home. That's why we've always done a for sale model. Rental work, well, there is a rental model, of course, it's a care home. You pay monthly fees in a care home, it's equivalent. And people are reluctant to probably commit to rental until they see they're at the stage of life where it's for a relatively short period of time. So if you're trying to attract, as we are, customers, and they're now, by the way, all so fit and active, we can't put enough gym classes on at 75, they're not thinking that their lives are going to end within 5 years. They're thinking they're going to go on and on and on. And our job is to keep that, the quality of their life as high as it can be for as long as possible, which means they're thinking ownership makes more sense for me than rental. So where rental works is in that later stages of life. It's more the US assisted living model, I would suggest, where there are higher care needs and people are willing to rent. I think if most of you asked your parents whether they'd like to sell their home and go and rent, most of them would say no. Rental's the tenure of the devil.
That's the most interesting positive start of any conference, Andrea. You're all going to die sooner or later.
I like
customers leaving this place.
I know, it's coming.
I like the hook from the previous. It's all shit. Well, that was quite. Probably got time for one more question over there to your right, Andrew.
And
No, that
you've got
The other right,
I think,
Andrew.
yeah.
Hi, Amanda Nurse Carterwood. How long do you think it's going to be until you've got an AI agent sitting on each of your boards?
I'm going to be dead by then, or I'm going to be one of his places. So, I mean, I can tell you about our board. One thing that has actually changed the last 4 or 5 years is that the CIO has become a very important part of our board and part of our executive committee. I remember when I started my career, the CIO was always the guy who was the gig that was sitting somewhere, and you only ask him if you wanted to reboot your PC. Now that CIO is actually a board member, and not only a board member, but his view and his opinions, or her opinion, they're actually part of every decision and every investment any company makes. So I think that, and if you look at how many CIOs are actually becoming CEOs, it actually shows you that that's the way the world is going to go. Would they be replaced by, I don't know, a hologram or I don't know. They might, but as up to that point, I think the CIO role and how it grows in hierarchy, it actually shows how important that space actually has become. So,
Yeah, and I'm sure companies like Principal, I'm sure Brookfield's no different. We are investing a huge amount in AI. We collect, we have 100 billion of AUM in the real estate sector across multiple asset classes and geographies. There's a huge amount of data that comes from that, and the ability to collect that data, analyze it, and use AI to look at various models and various assumptions to help make more informed investment decisions. I think we're already moving towards that. So I think it is going to play a very big role in how we look at investments and the decisions we make.
So I would say, though, there are some things that AI can't do, like looking after older people, for instance, giving them companionship, support, care. And let's not go too far. Of course, technology is going to be a very big part of what all of us do, and it can make what we do more efficient. It can actually be very supportive, actually, in helping monitor people's changing patterns and attitudes and how we support them better as they age and keep them independent for as long as possible. But you know what? You still need good people. As Dimitri said, you still need good people, and you need to look after them very, very well in a world where they're a diminishing resource.
And he hasn't paid me for the comments that I'm paid to make. But I read recently that in Japan they sell more adult diapers than baby diapers.
Yeah.
So that proves your thesis.
I was on a government.
I'm trying to get a discount. I
You're
don't
doing
know
right,
if you
doing
noticed
well.
that. There is a thing going on here.
I was on a government task force last year, and we did a piece of work in Holland with our equivalent, who said that in 30 years' time, 1 in 3 in the workforce will be caring for older people.
Didn't
It's
think my,
getting more positive, Andrew.
didn't think my panel was going to go to adult diapers. Right, so
Far away from that.
I'd like to finish. We've got a room full of investors and operators. I'd like to finish by asking, what is one piece of strategic advice you would offer for capitalizing on the opportunities with operational real estate? Lauren, I'll come to you.
Sure. So I think this ties in nicely with what various comments were made about focusing on the end user and also thinking about innovation and technology and how we enable what we provide to the ultimate consumer of the product. So I think my key piece of strategic advice is to be adaptable here. I think a lot of times in operational real estate, we're working in specific products that might be new to a particular market or new and trying to solve an issue that is pertinent, whether it's a demographical issue, housing shortage, et cetera. And so I think when you're working in a newer product or nascent sector, you do need to be adaptable to what the end user is looking for. You may need to be adaptable when you're looking with a new market, the local council, educating them what you're trying to provide. And I think there's also just an element of the fragmentation, which was brought up earlier, where there are a lot of different products, there are a lot of niches, a lot of different concepts with unique aspects to it. And so there's an element of just, making sure that you can adapt and can innovate and are not left behind.
Perfect. Giles, we've got 30 seconds left.
Yeah, I mean, similar theme. I mean, innovation is key. As an industry, we have to encourage innovation. But there's one sort of big challenge with that. What works perhaps in the UK might not be applicable in the Spanish market. There is still quite a lot of diversity from a real estate standpoint. So the operators you're working with, make sure they can deliver and they have the right track record, the right presence in each of the geographies where you're looking to invest or roll out new products.
Perfect. We can give our panel a round of applause. Thank you very much, everyone.